So today in the markets we had a big move up after we crossed our small resistance right here for the previous 3 days of trading, which is what we said was going to happen had it crossed above this. And since it opened nearly a point above where it closed yesterday, it was pretty clear from the get-go it was going to be a strong bullish day, and that's what ended up happening. The day was led mostly by the energy sector, which you can see here. The S&P went up about 1.5%, but the energy sector went up 2.7%. Clearly the leading sector in the markets, driven by the price of oil. And here's the price of oil, and you can see over the past 3 days that it's been moving up pretty quickly. A bit of a seasonal trend here, as January as well as July are usually bullish for the price of oil. January because of the winter, it's cold, people are heating their homes. July because of travel and vacation. But after this move down in oil, you've seen quite a big move up that we haven't seen in a long time. Increased nearly 20% over the past 3 days, and we haven't seen that big of a move since the housing crisis. So quite something to watch for. But personally, I don't believe the price of oil is going to come back to these quote unquote normal levels up here to this 80 to 100, 110 range without some big devaluation of the dollar. And the reason I say that is if we look at the dollar index, the long dollar trade by large hedge funds and institutions is one of the most crowded trades out there right now, given, I believe, in large part due to the fact that people believe that the Fed is going to raise interest rates, which I know they aren't. So until there's some sort of a bombshell economic announcement, such as the Federal Reserve not raising rates or not even thinking about it, or doing more quantitative easing, or China depegging their currency from the dollar, allowing it to rise, something like that will send the dollar back down. And when that happens, the price of oil will go right back up to where it usually is. Stepping aside for a moment, if you want to trade the oil on the way back up to what has conventionally been known for the last few years, one way to do it is by buying futures or trading on the futures if you want to bet on the timeline. But if you're not really sure about the timeline, the better way for the average retail trader to trade the oil on the way up is to use this ETF, which is OIL, oil. So that's how you do it. I'm in here. I got in here around 1050, and I'm going to hold this until it doubles back up here to 21. And these are, keep in mind, oil, the price of oil is never going to go to zero because it's a commodity that everybody uses. It's needed for people to run their daily lives. It's not going to go all the way down like a company stock might, a la Enron back in the early 2000s. It's something to consider because you know the price of oil is not going to stay low for very long. A lot of big companies make big profits off of oil. Saudi Arabia, their entire economy is based on the price of oil. They're the one pumping it all the time. You know it's not going to stay low for very long. If you go back, this ETF has never been lower in the history of it. And this thing moves very similarly, that's even a word, to the price of oil. Therefore, if you want to put some money away, knowing it's going to go up, you're not going to lose. It doesn't expire, so just hold on to them and then sell them when you have enough profit. So that's my side on oil. As one final note, just to compare where we were at the end of the housing crisis, this is the range that oil fell to, this 40 to 50 range, which is where we are right now. It never got below this then. I don't think it's going to go below that now. Look for oil to have a move up in the future. So now back to the markets. From a technical perspective, the last two bounces stopped around this 206.5 range If oil continues to climb up, expect the markets to hit that right there. And although we moved from a low of yesterday of 198 approximately to a close today of nearly 205, 7-point move in 2 days, that doesn't mean it's going to go all the way up, because if you look down here, we had a similar bounce from 199 all the way up to 206, and that thing stopped right there and came right back down. This volatility is not leaving anytime soon, so just keep that in mind, as it is very hard to predict one direction or the other. But when there's volatility in the markets, on the bright side for us, that means more opportunity for profit, as long as we're not in a crash mode like we were back here. We're going to be alright. Splits are going to be tight, movements are going to be large, and there's opportunity for gains. And one very quick note before we move on to the trades of today that we posted yesterday. As I'm looking at this big move in the S&P over the past the ending 2 hours from yesterday and the first hour of today, I read an interesting article that said most of this activity right here was by corporations buying back their shares, which doesn't really surprise me, as those are most of the people who are throwing money into the markets right now. They're going to continue to buy back their shares as long as interest rates stay at zero. And that's the big problem with the economy, when it's more profitable for you to return value to your shareholders, which is the number one criteria and objective of most big companies. It's easier to do that by borrowing money at 0% and issuing new debt in order to buy back their shares, instead of building something and producing a real product or service. And the longer we wait with 0% interest rates, the more distorted this economy is going to be, and the bigger the bust is going to happen when those 0% interest rates start to rise. And they're not going to stay zero forever, even though we've artificially kept them that way. If our bond yields get too low and our creditors get nervous that we have too much debt and bond yields aren't high enough to give them confidence in the dollar, and the interest rates are going to rise, and then the party's over. So until that time happens, expect a lot of these companies to start buying back shares, because a lot of their compensation is linked to the price of their stock. More than likely, most of their compensation is in stock options of some sort. Very rarely, when a stock goes up, does a company pay only salary. So probably there's a lot of times when it's 3/4 compensation based on the price of the stock. And don't expect the CFOs and the CEOs to just willingly give up all the gains of the past few years. They're going to keep that stock high, so it keeps their bonuses high. So now on to today's trades. We first looked at Amazon. Amazon, we said, was going to go bullish. Reason being, we were in an uptrend after the earnings report. Quite a steep uptrend, to say the least, over the past few days. So we set our stop was 358, but it had to touch 360.5 for it to be profitable enough for us to go up. So here's what ended up happening today. After 1 minute, it opened lower and immediately shot up. So I got filled right here. It was a luck fill, because at the very beginning of the day, this thing's moving around quite a bit, and the way the brokers work is that if you put in a trade where you say below this line we're going to get filled, it only works if the stock is actually trading below the line. If it starts trading at 360.3, which is what it did, and then all of a sudden moves up to 360.6, that trade to your broker immediately goes away. So even though the buy signal was triggered, if it goes above it, the broker completely ignores it. So I got filled here with a 367.5 call for $2.50 right there. And I'm paying a lot for slippage, which is the bid-ask spread difference. But you know, you know you're in a bullish uptrend. Very rarely do I like doing these, but I had it in there. I got filled, so now I'm in. A minute later, I'm already up 2.5 points. The slippage is gone, plus a little profit, and we're still going to be patient because there's more to be had. So it starts coming down right here, a little sideways movement, recovering. It goes down. Now don't get nervous right here. We're still above our stop loss, which is all the way down here at 358. But it's very often that what happens after a big move up is a retracement. As long as it doesn't cross below this 78.6, there's no need for you to get nervous because the move up was significantly faster than the move down. And then after that, it started going back up again. And once it crosses there, I see an extension. So I draw my extension here, and we're expecting 100% extension right there. And we already hit it. So immediately I'm thinking it's time to consider getting out at the first sign of any sort of consolidation of any sort or any stopping. So if it starts going up and then one of these and then another one of these and then another one of these, that's when I consider getting out, because from a technical perspective we're not supposed to go any farther. But I'm here, I'm staying in, we're continuing to go up, continuing to go up, continuing to go up. And at this point, that's when I get out. Even though we're still going up, I got out here for $5.15. And the reason I get out here is because I'm also taking a look at the S&P while this is going on. So if we go back to our S&P minute chart at 9:44, right there, you can see we're right here. And we're starting, in my opinion, we're going to peak out. And the reason I say that is because if we go back down here, as of 2 o'clock the previous day, we were at 199. And right now, we're trading on the S&P at nearly 204. That's 5 points without any sort of retracement or any indication that this thing's going to go backwards. So immediately I get out. And even though the thing continues to go up a little bit right there, I left a good probably 85 cents, 90 cents on the table, but I'm okay with that because the odds of it continuing to go up aren't very high given the big move in the market between that time. And once you're this high and you're pretty darn close to in the money, your delta starts going up. And once your delta is no longer down here with this option, the delta I got in with was in the 0.3 range. Once it gets up here, we're getting closer to the 0.5 range because right here is the strike of the option. And once your delta is higher, that means you're going to get more profit for every point in your favor. And that's why I'm very reluctant to, even though as the thing's moving up in my direction, just to get out just because I have a lot of profit. I know if I stay in and it goes a point my way, I'm going to make a lot more than I would lose if it went a point the other way. But like I said earlier, I got out because I thought the market was peaking out, and so that's what ended up happening. And after that, consolidation. And that's the consolidation I was looking for in order to realize that there's probably going to be a reversal. And that's what ends up happening right here. A big move down. and then a retracement. You can see this retracement right here. And once this, you can see this 61.8 right there, very similar to what happened right here. So once we draw this extension, once you see this, you can think, okay, maybe it's time to go back down. And that's when it ended up happening. It took a little while to get to that 100%, but it got there. And that's one thing to look for as soon as it gets up. Once you take that profit, don't start cheering and going away, because there's more opportunities for bigger gains amongst the same thing. I missed this, but that's one thing I need to start looking at in the future, is that once you have these massive move up, this thing is moving a point a second. All right, that doesn't happen to a $300 stock. That'll happen to a Priceline or something like that, or Google that's trading at 500 per share, Priceline 1,000 per share, but not down here. Once you see that, you know that there are people holding this stock that bought it at this 362 range, and now they go to get a cup of coffee, come back, and it's at 368, and they say, okay, I got to take my profit. So as soon as that happens, all the people are thinking, okay, now maybe it's time to start taking some profit, especially after the earnings gain, the big day before, and now a big move up within 15 minutes. That's the time when it's time to go down. And that very often happens. That once you have this massive move up, it's most likely going to be followed with some sort of a retracement, enough for you to consider to take some profit and for you to get in. And while we're on that topic, I want to go back a few days to Amazon a couple weeks ago. I want to go back to January 21st. And on this day, what I was looking at was a support line that hadn't really crossed for the last pretty much year or so. It's bounced a couple of times. But in the middle of this day, on January 21st, we are just going along. Here's the 21st. We're going along, going up. We're not crossing that 284 at all. Just going along. Little up day. Nothing major. Nothing major. Little retracement. Then all of a sudden, this massive move up right here continues to go up. And this move from here to here, that's 291 all the way up to 304 in the matter of, how long did that take? 15 minutes. Stock moved up 4%. Now at that time, that's one of those times when you think, okay, somebody's going to have to take a profit. So once you see a consolidation here, right there, you can think about going down right there. Or even if you wanted to wait, you have a consolidation move down and then even bigger move back up. As soon as it crosses there, you know somebody's going to start taking some profit. And wow, it went nearly all the way back down. So if that happens on a big move up in the middle of the day, watch to reverse and go the other way. And that happened today with Netflix as well, which I'll show you here in just a second. But if we go back to today's trade, after that happened, you saw the extension right there. It hit 100, and after that went back up and just went throughout the day as the market decided to move up. This one decided to trade sideways for most of the bit. But in the end, you buy something at 250, you sell it at 515. That is a 106% return. So that's what we made today on Amazon. Now on to Netflix. Now we said with Netflix we were going to go down with a stop at 442.5. This was our chart. we went down and saw this resistance channel right there. Here was today's trade. That line, that crossover today was 441, and we said anything, we're gonna go down with a stop at 442, but only if the market was below that peak line of the SPY of 202, and clearly it opened above that 202 line, so this was blown out of the water from the very beginning. However, if we go back and look at today, right at the beginning, it opened above 442 and a half anyway, so we weren't going to get in regardless. But I do want to take a quick peek, as we just saw that big move up on Amazon, and immediately after this happened, right there, big move up, another one of these, probably a point a minute, some even further, 3 points in a minute, right there. We went up, had a consolidation, and then another move up, and then after that, you can see right here, that'd be a good time to go down. And you can see it made a you would have made a little bit right there. When I'm looking at, when this is happening, is I'm looking at something like this, until that thing crosses right there, like it's going to continue to go, and right here is where you would consider to get out, right there. A 2.5 points is enough for a 25% gain, especially after the volatility is calmed down a little bit. So it's enough to consider. Didn't quite move the way Amazon did, but you're not losing regardless. And what I'd be looking at right there is a cross. So an entrance either here as it continues to move up, or an entry here. Either way, you're out with 2.5 points. Something like that along the line. But the bigger question would have been, given that Netflix has moved down in this resistance channel for 1, 2, 3, 4, 5 days, and then all of a sudden it breaks above it, that would be a cue to go up. And I missed it. I was concentrated on Amazon, because literally at the time that this is happening, Amazon is going up. I'm concentrating fully on that, so it's hard for me to trade two upswings like that at the same time. But it's certainly possible that once you think it's going to go down, your downtrend is broken, you can always look at it and read the chart from a technical perspective and then go up. So for tomorrow's trade, I'm going to look at Tesla going down. And one of the reasons I chose this particular one is because I'm looking at the market and the market's direction. If we go back to the SPY, since 2 o'clock yesterday afternoon, back here, right there, this thing has moved nearly 60 points on the S&P right there. And what I'm looking at is something that's in an uptrend but is looking for a rest. And what I came about was Tesla. And the reason I chose Tesla is because ever since this gap down, we've had a zigzag right here, 50% correction, 100% extension right there, and draw our support channel right there. This thing is in an uptrend, and given the last 2 days have been a big move up, about 5% or so, 5 to 6% in the stock. We're going to look for it to have a bit of a pause for tomorrow. And what I'm looking for is a move back to the 61.8 level right here. So we're gonna go down tomorrow on Tesla. Our stop is going to be above the 220 line. We'll call it 221.5 is what I'm looking at for a stop. Now, there are a couple others that I liked, but because of the market's position and technicalities and the way it's set up, the way I've described throughout the video, like take Baidu for example, Baidu looks like it's going to cross this resistance channel tomorrow, right here. So it closed today a little over 217. If it opens where it closed today, it's going to be above this resistance channel, and we're going to look for a move up. But the market really isn't in a position to move up, although Baidu really hasn't followed the markets particularly well. Considering the last two up days in the S&P, it really hasn't gone along with it. But I know that because of this little, what I call min-max right here, this consolidation where today's high is lower than yesterday's high and today's low is higher than yesterday's low, it's due for a big move. But based on the way the market is set up and the big move up over the past 2 days, I'm going to go with Tesla on the way down. So that's my trade. Good luck tomorrow.